Hello traders, this is a DAX recap video for Thursday, January the 3rd, and this in front of us is the updated chart with zones that was posted before the open. In my morning notes I said again that this main resistance and support zones remains the same, 685 to 75 and December 27 lows and 280 to 300 zone. Also that this middle zone we can use as a gauge of market strength or for an entry on pullback. To be open to take both longs and shorts, but however to favor shorts from the good location. And other than that, sellers would likely be active here and maybe even here on a first test. So let's go now to the charts and observe why should we, if the market is in the range, why should we favor shorts on a good location? Because if you zoom out your chart a bit, now this is a zones chart, so if you're doing this like you're zooming out, you will get a bunch of lines. So every day trader, in my opinion, should have several charts, one with the zones, one with let's say blank chart. I'm using this MACD and RSI only to look on the 4-hour and daily. I don't look it on the 1 hour and especially on the lower time frames. So this line here, this is it. So it's clearly that we are in a bearish environment, we are clear in the downtrend, so that is why I said favor shorts on a good location, even if we are trading in the range, because range, as every range, is going to be broken one day, and in bearish environment odds favor a breakdown, not a breakout. Now everything can happen, and this market isn't isolated, it's also depending on the S&P and so on. Now let's go back to the charts, to the zone chart, to switch to the 5-minute chart and observe where were the day trading opportunities for today. So this line here is the start of the pre-market futures session for today. This one here is the open, stock market open at 9 a.m. It is the opening moment of the regular trading hours, and the regular trading hours is already finished. Now it's 5:45, RTH session is over at 5:30, and now it's time to do a recap of this price action so far. So in pre-market we had basically gap down, and then after that market started to chop around, and as soon as we get close to the open, it is a good practice to put these two lines on your chart representing pre-market high and pre-market low, and you could do that like in 5 minutes until the open. And now we get to the open itself. So in the pre-market session before the open, market was balancing near this middle zone, and let's delete now this line. We know that this is because you can see this candle here, and as you can see, immediately after the open, market retested the pre-market low, and since it is very close to the middle zone and to the middle of this whole range, you could attempt a long trade here with a small stop, which means small stop doesn't mean 5-point stop, it means in my book at least 20-point stop, because as you can see, this is a 5-minute chart, and look at these candles here. For example, look at this one, first candle from the open, it is from 465 to 485, so this is a 20-point 5-minute candle. This one is even bigger. So we have now even a 1-minute candle can be like 20 points. So it really doesn't pay off to use small stops. You can use that in an environment of less volatility and with smaller ranges, you know, in more predictable environment, and those kind of environments are usually some long-lasting ranges, or when market is grinding higher. Now it's bearish environment, now it's more volatility is higher, and you could use, of course, smaller stops here, but then be ready to be stopped all over again. So this here could be our first trading opportunity to use this pre-market low as a launching point for a long trade. And as I said before, in this is bearish environment, I don't really I'm not going long that many times. I'm long only on the better locations like this here. I skipped this, to be honest, and but this was an opportunity for a smaller stop and to try to get like 2-hour trade out of it. And from here, from 466, you could get even almost a 3-hour trade to this next zone. As I said in my pre-market notes, even this zone can attract sellers on the first test. And closing of the trade should be always in front of the zone. Your closing order should be front running the zone, because that closing is not the time, you know, to be picky, to be, you know, to want to grab, you know, last 2 or 3 points. So that could be your long trade. And just observe this, you know, chop. I talked about that. I write about that in Twitter, telling that just to avoid this chopping here is will put you, you know, in front of the crowd. Because what the crowd will do, they will see this candle here, this red one here, and immediately, because we are in the bearish environment, and they will immediately picture themselves a breakdown. They will short this, but they will get just a swift reaction back. So chop trading ranges are traded to go long on the lower edge, short on the upper edge. Avoid this in the middle, and you could also wait for the range to break and then enter on pullback, and we will get to that also. So this touch of this zone was another chance, this time for short. Again, closing of this would be on the pre-market low, because now this zone is, you know, price was going back and forth through it, and closing of this trade, logical target should be again to the pre-market low. And as I said on Twitter, another attack on the pre-market low, because this was the first test right after the open. Second test, likely it's going lower, and that is what happened later. So this short could be closed here or partially closed here, and you know, another part you could close at the next zone. I said these zones that are close to these middle zones should be used as targets, not to fade them. So you want to go long here, you would use this as a target. And also additional short is, if you missed this, and now you observe that price is leaving this range. This was, here was a pre-market range. From pre-market high to pre-market low, we have this pre-market range. Now price is leaving that pre-market range, going back inside, struggling here, and now this here is our secondary short option to go short here. And now we are going to put our stop just behind this spike here. So basically in the middle of the zone, not above the zone, because this zone was practically invalidated here by this movement. But you know, when a zone is acting like an axis line, it could be, how should I say that, like temporarily invalidated, because as you can see, this zone provided many times a good spot for entry. This here was a support, then it was broken, on act as a resistance on pullback, then here was provided some kind of bounce, broken. So this here somebody could say this zone was invalidated here, but look at this. Now act as a pullback again, act as a support on pullback again. And as we can see later, it was acting as a resistance on the pullback yet again. So one zone can provide many times a good entry or a good exit. This time, in this case, this zone is providing good entries. So this here was a pullback to this broken zone, also a short, and now we want to see a move. For this short, we want to see a move all the way down to the 400 level. And this is here was yesterday regular trading hours low, and it is normal to see buyers to be slightly above, front running this. And if you want to go long here on this zone, you should also be on the top of the zone or maybe a bit higher. If you are exiting your trade, your exit should be a bit higher. So if you want to, short the DAX into the 400 level, you should already, as soon as you're getting into the trade, you got to have your stop and you got to have your limit target order waiting here on, let's say, 405, 403, 410, whatever, it's better to be slightly above, your wanted, desired level or zone. We are using now this zone as a target, but this zone can also provide a good long trade, again targeting pre-market low. Now this zone here we are using just for partial exits, not for anything else, just for partial exits and for judging how this market is strong or weak. So this could also be a long trade, again targeting this pre-market low. If you draw a fib from this move, then you will observe that the halfback is very near the pre-market low. The 61.8 is in the zone, and look at where this move died, right on the 78% fib retracement. It's a final fib retracement, a final chance for a reversal, and bears took that chance, as we can see now. But you should really draw fib and play with fibs and with levels in real time, because while this is happening, now the price is here, starting to bounce. No matter if you are close this trade or not, no matter if you are already in the long or you are not in the long, you're just observing. This is the time to draw that fib that I'm drawing now, to observe, are there any confluences? So be proactive, stay proactive, always try to, on top of these zones, to draw fibs, to draw trend lines. This is very helpful, believe me. So now that we know that halfback is here, 68 is 61.2 is here, we know where our targets could be, and if we are here in this long, and that is the only long that I would take for today, this testing of the 400 level, logical exit would be here, or for slightly better exit would be here. And now we are coming to this zone. As we can see, this was the last fib retracement of it, and also one trend line was, for me, was very helpful to really decide to give myself additional reason other than the zone, other than the fib. That should be really enough. But when you see this kind of, this is a small channel, and now it's broken and retested inside the zone with all these fibs and bearish environment and all of that. And this is also the time when the US market is already open, and when we should look at the S&P also for a confluence and for correlation and for confirmation. And the entry for the short trade, as I have shown from my own platform, oh, I'm sorry, I just duplicated more than I want, was here. Targeting now again toward the 400 level, using this zone as a first target and near this low of the day as a second target. As we can see now, it's almost 6 p.m. We didn't get a lower low. And it is also with confluence, so this was the target, with confluence with the S&P. As I also tweeted about that, on the S&P we had this usual thing on the S&P, which is a false breakdown. So far it is a false breakdown. We don't know what will happen until 10 p.m. but this is the range on the S&P, and we should also look at this while we are trading DAX. If we have a live trade which is in the New York Stock Exchange opening hours, and we have the S&P in the regular trading hours, then we should look at the S&P also, because this was the time when they are hitting overnight low and yesterday low from yesterday. Then this was the time to to look parallel with DAX and to decide should we take a profit here, or is there any chance that we could hope that this goes all the way down to here. And really it was a low odds that we could get a swift move to here, because by the DAX when DAX was about here, S&P futures was already like 2.4% down. So in order for DAX to fall additional 100 points, they should be like 3.5% down, really, extreme sell-off. So that didn't happen for now. We don't know. Now it's 6 p.m. It's a long time to 10. What will happen? But this, as I said that many times, 6 o'clock, 7 o'clock, 8 o'clock in the evening, it's not the time to trade DAX. It's time to trade US markets if you are trading at that time. So this was the opportunities for today, and basically this here short first touch of the zone, then broken range, pullback on the broken range was not so hard to catch, to be honest. And this one here was really a very nice pullback to this broken zone, the zone that provided many entries for us, and we had an immediate momentum to the downside. It was the best trade of the day. Here it would be a logical place to attempt a long, the best place for today to attempt long. And this one here is, really you have to be very prepared and very awake at 9 a.m. at 9:00 to try this, but it was also a good opportunity to catch like 2-hour trade with small stop. So this is for DAX recap. As I said, it's always a good practice, to for the instrument that you're trading. In this case, this is DAX, to look at this DAX on many different time frames and many different charts. This is one look at it, this is another look at it, and you could also use, of course, the daily candles or weekly candles to see the bigger picture. And that is all for me for this recap video. I wish you good evening and good trading.